arguably one of the largest exploration programs in Canada. I believe the budget was somewhere around 21 million. You guys are aiming for 300 holes.
I don't think you're going to see very many companies, if any, that have the consistency of great results that Great Bear comes out with. And that means
what I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
My next guest is the CEO and president of Great Bear Resources, Chris Taylor. They put out some of the best drill results the market has seen this year. Enjoy. Okay guys, Jay Martin here, CEO of Cambridge House, and we are looking for our next gold investment opportunity. I'm joined today by the CEO of Great Bear Resources, Chris Taylor. Chris, how are you?
Doing good, Jay. How's it going on your end?
Yeah, very good here in the home studio. And to be honest, Chris, I love being staying at home. This lifestyle suits me very, very well. So no stress. Now I'm excited to hear from you today because Great Bear is a story that most of my audience is going to be familiar with, but not everybody. And I want to hear the story from you. I'd love my audience to hear the story from you and kind of go behind the kimono a little bit. An interesting data point, I'm not sure how aware of this you are, but I listen to pitches all day. We're always looking for the next great opportunity. The number of times a CEO compares their company to Great Bear is it's amazing the amount of times. We're 20% into the pitch, and then, I want you to think about us like Great Bear, okay? Or similar to Great Bear, here's this and that. And, we love drawing parallels, but it happens all the time. So I can draw some with you, right? We're going to talk about, you're in the neighborhood of giants, right beside the Red Lake Mine. I'm sure you get compared to that all the time. So we're going to jump into all this stuff. So to kick us off, for anybody who's not familiar, let them in the room. Give us the 60-second elevator pitch on Great Bear Resources.
Well, it is funny to hear you make the introduction like that. A few years ago, nobody would have been comparing themselves to Great Bear. So I guess it's a good analogy of if you don't cut any corners, do lots of good science, and maybe, dare I say, not give into some of the market pressures and just keep the end goals in mind, how you can build a company up steadily over time to, a good valuation when you get a major discovery under your belt. So those are some of the things that really set Great Bear aside, is that, my partner, Bob Singh, and myself put the project together back in 2015, the end of 2015. And, if you're looking at between now and then, you're looking at having generated probably about $800 million worth of market cap from about a $2 million market cap start, and a series of high-grade gold discoveries that go right to surface beside the highway in the Red Lake District of Ontario.
Yeah, we'll talk about your proximity to the city. I mean, it's obviously a boon. We're all looking for that access to infrastructure, amenities for your employees. All that stuff matters when it comes to the quality of talent you can attract. You made a comment about not giving into market pressures, and your approach has been a bit unorthodox. So can you elaborate on that a little bit for me?
I use a slide in some of my presentations, and it shows a big hand holding kind of a puppet on strings, right? A little marionette on some strings. And I always circle the marionette, and that's me. That's the little junior company that has a vision of what they need to do. And the big hand holding the strings is the market at large. These are the investors. These are the audience. This is the industry that we're part of. And so our approach here has really been to say no a lot of the time to opportunities to try to push the company forward more rapidly than its natural type of growth. And that means, at no point in the Great Bear cycle have we raised more money than we need, or have we put on more drills than we need. We always make sure that science leads the company forward. And that means that, we're not as flashy as other companies. We've never, ever put out pictures of drill core before getting assays. That's something that drives me absolutely bananas when I see it, is people will drill some gold or whatever it happens to be and show a bunch of pictures on the internet. And, then the assays come back later. Sometimes they're good, sometimes they're bad. So we tend to be less promotional that way and just sort of issue all the numbers. And another thing that we do, which is really unusual, is there's no difference between the holes that we drill and the holes that we put into news releases. So a lot of companies will go ahead and drill, say, 10 or 20 holes, and they'll put the top 3, top 5, maybe half the holes into the news releases, and the rest of them they might publish on their website if they do at all. We put everything into the news releases. So what you see with Great Bear is really what you get. And I think over time that shows, you build up a base of trust with the shareholders. They know you're not trying to manipulate the information in any way. So if you're a Great Bear investor or an engineer or a geologist, you can go onto our website. You can get them right off the news releases, but you can go onto the website, download every drill hole collar, and every interval we've ever published, and do your own model building wherever you want. So in our case, the transparency has been a difference, and I think it makes a difference over the long term.
Yeah, okay. And I've heard you mention that before. Now, let's talk about your exploration program for 2020. It was arguably one of the largest exploration programs in Canada. I believe the budget was somewhere around 21 million. You guys were aiming for 300 holes. Give us the highlights.
A steady stream of good news has come out of that. I mean, if you wanted to summarize a series of 300 drill holes, how would you do it? Right. So you have to kind of take a step back and say there's really nobody else generating the consistency of shallow, significant high-grade intervals with these sort of wide, mid-grade, and low-grade halos around them as Great Bear. So we consistently do it. You can pull any news release out of the stack that we've issued over the course of the year, and they're all very similar. And the reason being, like, the system's really kind of consistent. So it's been one of the most successful programs, regardless of size. You go through a bull market like this, a lot of companies are going to raise a lot of money and they're going to spend a lot of money, but I don't think you're going to see very many companies, if any, that have the consistency of great results that Great Bear comes out with. And that means over time, there's a lot less risk involved as an investment in the company. And, you're seeing just the consistency of a big, legitimate future, I think, tier 1 type asset emerging in real time in the market.
Okay, now let's talk about that geology a little bit and your proximity. I mean, you're very close to the Campbell Mine. You're very close to the Red Lake Mine. You published some results, and I believe got a call from Rob McEwen comparing those results to the geology at the Red Lake Mine. So what did he see, Chris, that struck his interest and prompted that phone call?
Well, one of the zones that we found early on in the exploration a few years ago is very similar to what you'd look at for some of the high grade Red Lake style gold in vein type discoveries that you have the Red Lake gold mine going into production on. Our neighbors like Pure Gold Mining, they're going into production off of these things. They tend to be a couple meters wide, 2 meters wide. They tend to average about 10 grams per ton, and these companies can mine them down to a couple kilometers vertical depth. I mean, some of the grades that Goldcorp produced at the high grade zone at the Campbell Mine were really impressive, and that led to one of the most profitable mines in the world for many years. So, we have those types of discoveries, but those are really just satellite type occurrences around the vicinity of our big LP fault discoveries. So if you read sort of the analyst consensus, they're expecting us to come up with something on the, a million ounces, a few million ounces, somewhere in that range of that type of material in our Hinge, Dixie Limb, Arrow zones, these sort of things. But that pales in comparison to what we have at the LP fault. So what got Rob involved was those early results. Rob actually, divested of a good portion of his position prior to us making the discovery of the LP fault zone last year. So that was something that post-dated Rob's involvement, and that's the largest discovery on the project.
Okay, so I want to talk about that because anybody who's not familiar and pulls up the chart and sees the performance from the spring forward might think they've missed the boat. And so what are you telling shareholders that have that sentiment, prospective investors who are looking at the stock and shareholders that are considering taking profits?
Well, in our sense, there's really, we have a lot of interest in what we're doing right now. So I have a lot of conversations with the industry at large, which includes analysts, investment funds, and large mining companies. And in these guys' view, there's only 2 tier 1 assets in Canada. In all of Canada, all the mines in the country, there's only 2 in their mind. And that's the Malartic deposit, which is operated by Agnico, and that's the Detour Lake deposit that was just bought by Kirkland, right? So they're looking at what we found here at Dixie as being potentially the third one of these tier 1 type deposits. Now, the thing about tier 1 deposits is they're really rare. There aren't that many in the world, and they're all almost exclusively owned and operated by major mining companies. But from the investor perspective for potential value, the thing that ties them together is if you look at the value of these projects when they go through transactions, and you can look at the purchase of something like a Canadian Malartic for billions of dollars, a few $billion. What did Kirkland pay for Detour? Have a look at that. So these are tier one assets. We think that's what we have. We have to show it. We have to keep drilling. We have to show the maiden resource next year, economic studies. But if that's what we have, really, this is early days on the Great Bear story.
Okay. Yeah, I was actually talking to Sandeep Singh today as well. They've got the 5% top line royalty on the Malartic mine, arguably the best royalty in the business right now. Now, you guys have maintained a pretty tight share structure, Chris. And I've heard you talk about your unique financing cycles, how you differentiate yourself from your peers with the way you raise money. I want you to touch on that a little bit for us.
Well, there's always a temptation. Like I said, if you think about the junior companies, none of us are cash flow positive, right? It's not like we're mining companies, we're exploration companies. So we're not generating revenues. We have to go to the market for money. And I just try to keep in mind that every dollar that gets spent out of Great Bear is shareholder money that's getting spent, so it's not coming out of revenue. So you have to be careful with those kind of expenditures. And there's always a temptation in the industry to take more money than you need and basically distribute the shareholder base. In our case, we right now probably have about $45 million Canadian in the bank. That'll see us through quite a bit, like over a year of drilling at current rates. So it's not like we're going to run out of money anytime soon. You just basically have to balance as a company the risks of running out of cash before you need to do what you're going to do, and the temptation to make the bankers happy by taking money from them when you really don't need it.
That's the balance, isn't it? And you want to take the money when you don't need it. You want to take it on your terms, right? And the comment that you made, I don't want to overlook it. Every dollar we spend is shareholder money. It's obvious, right? But it's not every company gives that money that much respect. And what we harp on here all the time is like when we talk about betting the jockey in the junior game, you're betting the jockey in the junior mining business. What does that actually mean? And right, you're betting on the judgment and decision making of one or two individuals who are going to be stewards of your capital, right? That they're only going to chase the best business opportunities, not throw good money after bad. They're going to protect your interests. And we throw that term out all the time, bet the jockey, but it's important to dive into what that actually means. Who are the individuals who are going to be having that adventure with your cash, and do you trust them, right? It's highly, highly important. So thank you for mentioning that. Now, we talked a lot about 2020. I want to talk about 2021. And when I scheduled this conversation with you, I had a couple of people want me to ask you if you're looking at a big board listing and if you had any sense of timing on that.
Yeah, like basically right now, if you looked at a news release that we put out, Thursday morning this week, we're talking about adding a new director, Paula Rogers, to the board. Basically, we're getting ready with the board structure and the committee structures and the types of expertise inside the company for being able to do that kind of big board listing, mainly like based on the market cap now. I think that's a suitable home for us to land on. I don't have a specific date in mind, but you can bet that we'll be ready to do it.
Right. Okay. Now talk to me about your vision for the future, Chris, because you've shown the market the quality of your deposit. Your drill results have been consistently exceptional quality. I'm wondering what you're going to do with this, right? Are you going to take the ball and try to run it into the end zone? Are you entertaining conversations with suitors? As much as you can, let us in on what your vision is for the future.
Look, there is only one vision for companies in our position in this kind of situation. I find this kind of, it's a good question, and I like having the opportunity to answer it, but it doesn't matter what your end goal is as a company. What you need to do is you need to choose to advance the project, because the project, if it's legitimate, the further it goes, the more it's going to be worth. And that means if you're in a position like Great Bear, the very best thing you can do to get shareholder value is keep advancing the company, keep advancing the project through all the stages that de-risk it and show the increasing value. So when you hear companies setting themselves up for transactions, I think that's a false approach. There's a false dichotomy there as well. I think there's only one choice that companies have, and that's to keep pushing forward and keep de-risking that investment. Because quite frankly, for companies in our kind of situation, the less risky the asset is as an investment, the higher quality and the longer term some of the institutional shareholders that you get later in the game, the better quality they become. So really, you have to have the same focus, regardless of what your true intention would be. In our case, it really is to build this mine out. You look at guys like on our board, Mike Kenyon, he's been involved in several major mine builds and several subsequent sales. And the reason is, once you get the project advanced to a certain state, you're either going to be making money for your shareholders directly, or you're going to do it through one of these transactions. But the goal should be the same.
Okay, now I want you to touch on the cap table a little bit, starting with the skin in the game question. Talk to me about management and insider ownership.
Yeah, like in Great Bear, we've got about 10% of the stock in management and insider hands. Doesn't sound like a lot, but in our sense, that's because we've been really careful with capital structure. It's a very meaningful position for all of us, and it's one of these things where, when we did the deal on the Dixie project back in 2015, I actually ended up restructuring the company back in 2017, bringing in a new board of directors, the whole bit. So we had a really tight share structure, but we had to buy our share positions in the financings and in the market alongside everything else. Because of that rollback, nobody had a position in Great Bear when we launched. We had to actually buy it like everybody. So we've accumulated share positions over time, and that means we've kept ourselves aligned with shareholders over time too.
And can you touch on any other Cornerstone shareholders?
Yeah, we've got, I think our largest shareholder is Rob Cohen at 1832 Funds in Toronto. So he would have about 12 to 14% of the company, I believe. And another one, I think at about 5%, would be Joe Foster at Van Eck Funds in New York.
Got it. Okay, awesome. Okay, Chris, look, I really appreciate you coming on and sharing the story with us. I wanted to hear it from you. And I have to say, everybody that I've interacted with on your team is fantastic, by the way. And every time I have an interaction with anybody at Great Bear, so hats off to the culture that you built over there. It shows. So congrats on that. And thanks again for coming on. Glad my audience could hear it from you. And I hope to catch up again soon.
Okay, great to talk to you. Happy to chat anytime. Thanks, Jay.